U.S. futures point to a higher open while European markets trade lower and Asia finished down for the session. Investors face a busy earnings calendar including AT&T, Union Pacific, Eli Lilly, and Ingersoll Rand all reporting before the bell. Weekly jobless claims, the Philly Fed survey, existing home sales, leading indicators, and natural gas inventory data are also on tap. Adding more volatility and headline risk to the market is options expiration tomorrow and focus shifting to Sunday's summit of European leaders on the sovereign debt crisis. I'm Jill Malandrino with The Street, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino with The Street's Options Profits, and together we bring you the morning call. This is a market you cannot fall asleep behind the wheel. We have options expiration tomorrow. We are in the thick of earnings season. We have a ton of economic data, so how are we setting up for today?
There's a lot going on. So when there's a lot going on, you really have to monitor the action very closely. As far as this move, it's been over 2 weeks, and it's been a very healthy move following a lot of technical rules. As we are in the midst of earnings season, you're seeing some faulty action in some of the leaders. Not action that says game over, but just, like you said, some action that says you can't fall asleep behind the wheel and you just can't be long everything. You need to be long select few and even small short in some areas.
Right. Well, we also have a lot of volatility, as we said earlier, with options expirations. You have more volume coming into the market. You have more volatility coming into the market. Sunday, we have the European summit where they're going to, again, address the sovereign debt crisis.
So with all these issues coming up and such a big move in the market still has a lot to prove. If you look here at the chart of the S&P, let me show you what we're seeing here. This was that reversal low. This was that Tuesday when we took out the range, came back above it, and the bears lost control. This was when it was a time to get a bit more aggressive, when it held up and broke this mini downtrend. But up here, it's just a little shaky. The bulls have a lot to prove. We need to do some work above this 1200 to start building better bases, get more participation, because right now, 2 distribution days or 2 off days after a new confirmed rally is just not exactly what you want to see. And if we turn to the Qs, which has been tech, which has been the leadership, we've now seen 2 distribution days in tech out of the last 3. So it's just throwing a little caution in the wind. We want to make sure it doesn't lead to something a bit more faulty or more technical damage. Moving
along to the sector spotlight, high beta tech. Only a third of the S&P names have reported, so we're still early in the earnings season, although it's been very heavy. But the key theme that has evolved is we've had these big tech names bid up way into earnings, and they've reported and they've come crashing down. Let's start with Apple. It was down 5% yesterday following its earnings report Tuesday after the bell.
Yeah, Apple just didn't come through the way Apple usually comes through, and they kind of did it.
In 7 years, they missed.
Exactly. So a lot of people who are playing that all of a sudden Apple, which usually does it on earnings, is going to make new 52-week highs and goes. It got sandbagged. Guys who took options like me are worthless. But longer term, now we have to really figure out the new direction. And as of now, if you look at the chart of Apple, there are some things I need to point out. Okay, first things first is you have a mini island top. An island top is when you have a huge gap up. People are buying it in here, and then you have a huge gap down, and no buyers come in on this dip to fill this gap, so people are trapped, and that could cause a new direction. So short term, I know some guys made money long yesterday in the beginning, and then turned tail once it couldn't fill this gap, and they got short. So now for today, traders are going to see if we could break below 397.80. So I think it's up like $1 now. If all of a sudden it shows a little relative weakness, guys for cash flow will short this area, and I do see bigger support that should come into play, and that's down at the 50-day moving average around 388, and that also coordinates to a gap that starts around 391. So 391 to 388 is an area of bigger support. So we just need to see how the next few days pan out. But if this pro gap controls the stock, it could see more downside over the next few sessions. So that momentum new high trade is off the table, and it seems like that type of trade is off the table for a lot of these high beta momentum names for now.
Right, and moving along to Amazon for the same reason, that's also going to be our options profits play of the day today. They report October 25th, and we've seen that name come in a little bit as well, and I think a lot of it is off of this downside momentum that we see from Apple.
Exactly. Like Amazon was basically waiting for Apple to make new highs. It had a high level flag, and once Apple came out and gapped lower, it left that area. So if you look here in Amazon, let me show you from a short-term level, it was hovering in a nice little bull flag right by the previous high, and then it broke it to the downside. So some traders made money short, below this 240, 236, but right here, this took that new high trade off the table unless we get a blockbuster report. So for now, I think be a little defensive. If Apple continues to pull in, this could come down to this moving average around 217. So just, you can't just be long these big high beta names just because you think it's going to do what they've done over the course of the past few months.
Right, and I think that playing the ranges and really learning how to recognize the patterns of these names is so important rather than just being married to the name itself. Moving along to internet search giant Google. It's held up pretty well. What's the new level of support we're looking at here? Well,
Google is something I've been watching, and it's very frustrating because they had a stellar report. They had great earnings. They gapped it open, and it's still okay. It's holding that earnings gap. That's what you want to see. We had a nice little cute long 2 days ago, and yesterday it gave most of it back. So this is the line in the sand here for Google. Google, if you see here, this was the earnings gap. But if you bought on this earnings gap, you're not making $1 yet. Okay. So here you are. It's 4 sessions later, hovering above this 577.40. This is what traders will watch. If it shows some relative weakness and starts to break below this, there will be guys that short this, to get more of a gap fill. Then have 570, then 557. You take a look what happened on the last earnings, because this is what traders remember. You had a huge gap up, it sucked money in, and then it just started dribbling lower, and once it broke this gap, look where it went. Let's hope it doesn't happen this time here, but if it does, it shows more weakness and some more chinks in the armor.
Moving along to China's Google, BIDU, and one of your favorite names to trade. That's hit some key moving averages as well.
Yeah, this had a nice move off the low, but it showed relative weakness, and now that too, I don't see it making new highs, so soon. And if you look here on BIDU, it turned tail at a decent resistance level. Okay, you have a high, lower high. This was the pivot low. Came up quick, and now it's starting to dribble lower. If you think you could just buy the dip here, I would just be a bit careful, okay? This is the quality name out of China, but you can see a bit of a dribble down to 120 or even down to 115 before earnings. And if you start to see other earnings come out without getting rewarded, like Google, if Google couldn't go up, then BIDU is going to have to really be impressive to go up. And obviously, it's not like a $550 stock. We talk about that stock split game, but whatever, I'm not going to get into it now.
Let's round it out with SINA. A couple of retracement levels to look at here, too.
SINA yesterday was a great day trade because there were like 2 pieces of news that came out. One being, out of China, that the China fund might invest in it, a pop, and then they were on CCTV. But both those pieces of news got sold, so it's a little alarming. If you take a look here, it tried to rally, and it actually pulled in. So in this low 80 area was a good area for some news to come out. I guess the news wasn't verified because it hit the moving average, closing the lows. So as long as it holds above 75, it's okay, but this is a dangerous stock, a lot more dangerous than BIDU right now.
Okay, so the one theme that has emerged so far in a pretty early earnings season, although it's heavy right now, is high beta tech keeping its momentum. We're going to go to a quick commercial, and when we come back, we jump into the trenches.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
Welcome back to the morning call. We jump into the trenches with some significant earnings reports yesterday, starting with eBay. They reported in line. They guided about a penny higher than consensus for Q4 and for FY11. How's that stock holding up?
At this point, it doesn't feel like it was enough. I spoke about it with Alex yesterday, saying they're going to need a rock star report, considering it's right at big time resistance. If you take a quick look at the chart, you will see that the stock has had a great move, and this is why you have to know where these stocks came from earnings. Stock came from as low as 28 all the way up to upper level resistance, into earnings, so it had to be a blockbuster. Was it strong? Yes. Was it a blockbuster? No. What I would do is I would watch support at 32, see if that, if they come in and buy it today, and if they don't buy at 32, you really have bigger support down here at this 30.70 to 31, so watch to see if they could try and price it in. Kind of like, it was kind of like an IBM. IBM was solid, right, but it wasn't enough after a huge run in order to give it additional gains.
Right. The market is really very picky when it comes to earnings reports this season. And again, they want to see bottom line revenue and not just cutting costs to make the quarter. I think it's a very important theme. Moving along to WYNN, this is a stock we talk about all the time, Las Vegas Sands as well.
Yeah, well, this is another reason why I'm just a little hesitant to be so long. I've been very cautiously optimistic in trying to be long, but something like WYNN, that was one of the stocks that I trade a lot with LVS, bounced off the lower end of the range, was waiting for earnings. Earnings came out. They were pretty soft. It's opening down. So, that's why I don't take stocks into earnings, because that could happen. But anyway, you look at this chart, you had a nice mid-level range here after a move off the lows, and it's opening down. I would say, I will look at it to see. I've seen funnier things where they try and price it in, but I think support here for WYNN to watch would be if it fills this gap down to 120. And if it's actually stronger, then I would think it'll hold a portion of this gap that starts around 123. So if it holds 123, that's pretty constructive. If it breaks that, this gap gets filled real quickly down to 120. And on LVS, that supports around 42. If 42 breaks, it could see 40, 50 quick.
Moving along to American Express, they had a solid beat on card member spending, but they also were spending as a company on rewards programs. And again, the market doesn't like that right now.
I'd like to know what kind of rewards programs they're spending on it, because every time I try and get my rewards points, I have a big time problem. But anyway, AXP, you look at it here, it's not as spoken about as like an MA or a Visa, and it wasn't even really at the top of the range. This was a nice pattern here. It's still in a downtrend. Was consolidating well. I would say I'd watch 45. It should hold around here. I don't think it was such a bad report, but I don't think it was enough to break this above 47. So we'll have to figure that out at another time.
Moving along to Riverbed, they had a solid beat. They brought up Q4 estimates, but gross margins were flat.
Well, Riverbed is up right now, and one of the bright spots, we have some bright spots. Like Intel was a bright spot. There are definitely some bright spots out there, but I've seen more dark spots and bright spots. If you look at RVBD, nice report. It's decent little pattern. They weren't really expecting much. Look at the bottom end of the range it was in compared to where it was. So I think resistance will be around 28, 29. Not sure where it is right now, but so I can't give you exact. So 26 and then 29. If you're in there, I would just stay in there. And if it holds its gap in the first 30 minutes, meaning it gaps up, shows relative strength, basically you might get a gap and go, and then that's when you buy, but I would wait at least 30 minutes. Don't just jump in. And
rounding it off with SanDisk, they report numbers after the close today, and this is a name that you've gotten involved with.
Yeah, SanDisk has been showing relative strength. Technically, it's been really strong. Did trade off a little bit with Apple. It's just a little tough right now because you are seeing a lot of stocks getting sold off on earnings. So, you have to be, I would say, hedged in this one or not too heavy. If you look at the chart here on SanDisk, if you're a long-term investor, I think you're fine. It's one of the chosen ones. It's just, unfortunately, from the low to where it came from, it's come a long way. So it's going to need a big report. So if you have a long-term time horizon, I think you're okay. If you're a trader, you're probably not taking it long anyway. If you think you want to take a shot on it, the day of earnings, you probably should talk to Jill because she's better at option strategies than I am. Typically, I take in-the-money calls, and then so at least I know my premium paid.
Okay, moving along to quick hits for quick cash, starting with Goldman Sachs. This name can't put 2 days together.
Well, it actually put 2 days together for the first time. It couldn't put 3 days together.
3 days together.
But anyway, 98.50 was where it broke out from. It reached the moving average of 105. See if it could hold above 100, potentially to get back in. But the real line in the sand is that 98.50. That's when I'll get interested to try and buy that back.
Green Mountain Coffee, this stock has been slammed. Einhorn out there with a screaming short.
Yes, well, thank goodness the stock gave you signs that it was getting technically weaker well before he came out. If you take a quick look here, this is why you follow technical analysis. If you take a look here, this is when it put the top in, okay, and then it broke, retested it, so technically just made a lower high, and then it gave you a big potent down day. And when we had that big rally, since that last Tuesday, look what it did. It did nothing. Back in the day, this would have been back at high. So that, just like that Netflix that showed you relative weakness before the news showed you it. And then this was really the meaty short, the time to get short around 89 now, down here at 70. I would use yesterday's low as a pivot, 69.80. I think you should be covering around here. And now at this point, I think if you see relative strength, you can get a cute little long, but don't be stubborn, just buy dips. Use that lower pivot as your area to do some action.
Moving along to CME, a name that we've played a couple times with options profits and have done really well. They announced a new IRS clearing record standing for interest rate swaps.
Yeah, I haven't traded this in a while. It was a great strategy then, but I think the range is getting tight. It does look, if they do come out with some decent results, it could break high. If you take a look here, You know, it's got a nice little wedge pattern. It's getting tighter. I love tight patterns. Above 262, I think that, yeah, 262, it could start breaking to the upside, you know, and to the downside if it does disappoint. Below 250, that's the way I would jump on the short side. So 262 to the upside, 250 to the downside.
Moving along to Intel, I think this was the untold story of the tech earnings. You know, they did well. It's held up pretty good. I think it's interesting to note in the cloud space, we spoke about this with CRM the other day, names like Intel, Oracle, IBM, they're gaining a lot of market share from the smaller names like CRM, VMW. So let's take a look at Intel, how they performed after earnings and yesterday.
Well, it was interesting. I think for the first time, they couldn't actually sell down Intel on the news. What they always do with Intel, no matter what it was,
right,
sell, sell. This time, Intel had a big move into the earnings, and then they couldn't sell it. So it's showing some institutional support. They're buying back a lot of their own stock. I think they're changing their image, which is good, and it could be better for the market. At this point, I'd like to see it just kind of hang out here. If you look, this was an area where you could have bought the pivot. This was when we broke this mini downtrend, and now it's, you know, now it's basically near highs. Big move for Intel. What you can see though is you could buy it versus earnings gap. Let it hang out here, go sideways for a little bit, and once it develops a new flag, hopefully we'll be re-entering or adding for momentum above yesterday's highs. But this needs time to digest. Don't jump in Intel today unless you have a really long time horizon, so there's no need.
Rounding off quick hits with the ETF OIH, which follows the oil sector. Let's look at a new stop for this one.
Yeah, because OIH has had a good move off the lows, but it's getting a little faulty in front of its 50-day moving average. So if you take a look here, it looks decent. It's holding a bit higher. This is that area, I would say, if it starts to break below 117.50, you're out. But as long as it holds this flag type pattern, it could build. I would be a little bit cautious here on this group. This was a weak group. Did come off the lows, but it's so far off the highs. Big resistance right in front of it. If the market does start to falter and we start to break below 1204 in the S&P and go back down to 1190 or so, this group should get hit pretty quickly. And then obviously my big line in the sand, my don't pass line, you know, to keep this rally in check for the fourth quarter is at 1175, the 50-day moving average. As long as we stay above that, there's still a chance for 1250 to 1300, and then obviously there's some levels in the middle.
Okay, so we have a lot to look for today. We have a very busy trading day. We have a slew of earnings coming out, a ton of economic data, options expiration tomorrow. Then we have traders looking at the European summit on Sunday. There's a lot of headline risk. There's going to be a lot of volume, a lot of volatility going into trade today and for Friday.
Exactly. So what you have to do as a market participant is just know your time frame. Know your risk tolerance. If you're in tier 1 macro long and you've been sitting that way since you've been accumulating between 1100 and 1140 over the past 8 weeks, just sit tight. If you're trying to be a swing trader and you're trying to stay with this new current uptrend, at this point it'd be a little lighter ahead of that news. And if you're a professional trader like me that could put things on quickly or off, I would be, 1 foot in the door, 1 foot out the door, or very light if you enjoyed the move.
Okay, and that's our trading plan. I'm Jill Malandrino, and that's your morning call.